Imagine putting $267 billion or 50% of your $534 billion portfolio into one single stock. Wow! That's exactly the kind of portfolio allocation you see in Warren Buffett's investment company Berkshire Hathaway.
I formed my first partnership in May of 1956, so this was a year-end balance sheet, which I typed myself. In fact, you'll probably find a few typos in it. And these are the partners I had at the time, and this was my father-in-law. That was my roommate in college. That was his mother. That's my Aunt Alice. That's my sister Doris, and that's her husband Truman. And
welcome to the Invest with Jiri channel. Today we'll take questions. What stocks does Berkshire Hathaway hold? Why does Berkshire Hathaway hold 50% of its portfolio in Apple? Why does Buffett love Apple stock so much? What is Berkshire Hathaway's performance? Where would you make more money, investing in S&P 500 or Berkshire Hathaway? Recent significant changes in Berkshire Hathaway's portfolio. Is Warren ceasing to be a long-term investor? What stocks does Berkshire Hathaway hold? When you look at Berkshire Hathaway's 50 largest positions, the top 5 are especially noteworthy. Chevron with 5.93% of the portfolio, Coca-Cola with 7.15%, American Express with 7.22%, Bank America 9.03% and Apple with 50.04%. Many investors follow Buffett's portfolio. Buffett's strategy of selecting companies for his portfolio has become an inspiration to many investors, and his position in Apple stock symbolizes his confidence in the long-term potential and stability of the technology company. Why does Berkshire Hathaway hold 50% of its portfolio in Apple?
you know, the good thing about Apple is that we can go up. They buy in their stock, and instead of owning 5.6%, they got about 15 billion, 700 and some million shares outstanding. They get down to 15.25 billion without us doing anything. We got 6%. So we can't own more than 100% of the.
The performance of Apple, which can regularly generate profits, is crucial. This financial stability is a key indicator for Buffett because he evaluates companies mainly on earnings growth over time. The foundation of Apple's success is a strong moat, a term Buffett often uses to describe a company's competitive advantage. The strength of Apple's brand plays a key role in creating a strong moat. Fans enthusiastically embrace new products such as the latest iPhone or Apple Watch, showing brand loyalty.
Why is it so important for you to have the latest phone so quickly?
Because this time they are in different color.
Because it's a different color?
Yep.
That's what's brought you here?
Yep. It's a part of my life at the moment.
Apple's customer loyalty provides the company with pricing power to raise product prices. In addition, Apple's commitment to innovation is evident, as evidenced by its continuous product development. The launch of the Apple Vision Pro surround handset demonstrates Apple's commitment to staying on the cutting edge of technological advances. Why does Buffett love Apple stock so much?
A criteria for Apple is different than the other businesses we own. It just happens to be a better business than any we own. And we put a fair amount of money in it, but we haven't got more money in it than we've got in the railroad.
At the end of 2016, Berkshire Hathaway only holds 6% of Apple. Why is it now 50%? Such a fundamental change in portfolio allocation has a significant contribution to Berkshire Hathaway's portfolio value growth over the next few years. Warren Buffett has become a significant institutional owner of Apple stock. This investment is considered an exemplary example of Warren Buffett's stock due to Apple's remarkable financial performance, earnings, and quality management. Buffett, known for his long-term investment approach, often prefers to invest in companies with solid economic fundamentals and long-term growth potential. In the case of Apple, he seems to have been persuaded by its competitiveness in the marketplace, its solid track record, and the strength of its brand. What is Berkshire Hathaway's performance? Looking at the price performance of brk-b, representing Berkshire Hathaway, and the S&P 500 index of the largest US companies, it is probably clear to everyone that this is an investment miracle. Few investment funds have the high performance of Berkshire Hathaway. Whether the market is falling or rising, Berkshire Hathaway is rising. In 2022, Buffett's excellence is once again on display. Berkshire Hathaway outperformed the market, posting a 4% gain compared to the S&P 500's significant 19% decline last year. Since taking control in 1965, Buffett's Berkshire Hathaway has outperformed the market in 39 of 58 years. In only 19 of those 58 years has the company failed to outperform the broad S&P 500 market. Berkshire Hathaway operates as a holding company. That is, it focuses on owning various companies and is not active in direct business. It raises funds from investors, which it invests in acquisitions or purchases of other companies. In the case of Berkshire Hathaway, these funds are also used to invest in the shares of other companies. BRK owns several companies with full or majority stakes, including well-known names such as Geico or Duracell. Where would you make more money, investing in S&P 500 or Berkshire Hathaway? Cumulatively since 1965, including dividends, the S&P 500 has experienced a significant increase of 24,708%. If you had invested $10,000 in an S&P 500 index fund 58 years ago, the value of that investment today would be approximately $2.4 million. 65 years is a very long investment horizon, and it shows that compound interest makes sense. But how much would you have made if you had invested in Berkshire Hathaway in 1965? Since then, Berkshire Hathaway stock has increased 3,787,464%. This increase exceeds the gains of the S&P 500 more than 153 times. An investment of $10,000 in Berkshire Hathaway today would be valued at roughly $355 million, an annualized return of 19.8%, nearly double the S&P 500's annualized return of 9.9%. Investing in Berkshire Hathaway stock. Buffett is a proponent of investing in companies that have a long-term, sustainable vision. He is not a fan of quick fixes and day trading in the stock market. Thus, the benefits of owning Berkshire Hathaway stock are seen over a long time horizon to allow compound interest to take effect. The ideal holding period is forever. This is the slogan Buffett has made famous, but it is important to add that this is true if you own parts of excellent companies with excellent management, as Buffett himself adds. Recent significant changes in Berkshire Hathaway's portfolio. There were significant moves in Berkshire Hathaway's portfolio in the third quarter of 2023 that suggest active management of the investment strategy. One key move was a reduction in holdings of Chevron, CBX and HPQ, signaling the portfolio's adaptation to current market conditions. At the same time, a smaller holding in Amazon was adjusted. This adjustment indicates flexibility in optimizing asset holdings. Perhaps the most significant move was the complete divestment of General Motors, GM. These decisions confirm Berkshire Hathaway's ability to respond consistently and quickly to market dynamics. In addition, Berkshire Hathaway divested itself of shares in Procter & Gamble, Johnson & Johnson, UPC and Mondelez. There was also an interesting element of divestments in the insurance title business, namely Aon and Global Life, which may signal an adjustment of the investment portfolio in light of current industry trends. Is Warren ceasing to be a long-term investor? Warren Buffett's reputation as a long-term investor is justified by his strategy of buying and holding stocks for many years. However, the recent rapid changes in Berkshire Hathaway's portfolio may seem like a departure from this strategy. Significant changes in Berkshire Hathaway's portfolio have occurred in the past. Examining the history of BRK's portfolio adjustments in previous years, such as the divestment of all airline stocks in 2020 in response to the impact of the pandemic, or the divestment of pharmaceutical and biotech stocks in 2021 and 2022, one can see Warren Buffett's dynamic approach. Buffett prefers dividend growth stocks. We can see this in Coca-Cola stock, for example, which reflects his investment philosophy. The stability and regular income from dividend stocks contribute to the resilience of the portfolio and show a combination of long-term vision and the ability to adapt to changing circumstances. Let's summarize. Warren's admiration for Apple stems from its growing earnings, brand strength, competitive moat, and innovation, all of which coincide with Buffett's investment approach of identifying companies with sustainable competitive advantages over others, along with long-term growth potential. That's why BRK holds 50% in Apple. What can the ordinary investor take from this? We can all learn from Buffett's approach. Careful stock selection, focus on the fundamentals of the company, quality product, and also a significant brand. As the eminent value investor Peter Lynch says, the best stock to buy may be the one you already know. So which one will it be? Have fun and invest wisely.